Board of Governors. He is now an economics professor at the University of Chicago Booth School of Business. So really good to see you. I'm hoping you could make some sense of this. I laugh because I come from an emerging market, and when I see these numbers, they don't scare me. But if you've got the world's largest economy experiencing it, then it absolutely means that we're in danger zone. What did you make of Jerome Powell's messaging today and his move?
I think you're exactly right. I mean, we're experiencing inflation like we haven't seen in 40 years, but inflation that is much more common in emerging markets. And we're starting to move rates up rapidly like emerging market countries do. I think Jerome Powell said exactly what he needed to say, that inflation is the priority. They're moving 75 basis points because they really need to make sure that inflation and inflation expectations don't go up any further and hopefully start to come down relatively soon. They're front loading the interest rate changes, which I think is very important, because if they wait, as some people have said, well, why don't you wait and see? Well, maybe the economy will, turn down. If you wait, you get into a late 1970s, early 1980s situation where inflation goes up and interest rates have to go to double-digit levels. We're nowhere near that. Hopefully, we won't have to go anywhere near that, but that would be the consequence if he waited.
So, I mean, we're looking at this 2% inflation target, and we're wondering whether it is realistic under the current scenarios, and whether, we should see the Federal Reserve take a more realistic approach on inflation. Would you suggest that?
Well, I think it needs to maintain its credibility, and in order to maintain credibility, it can't just start moving the inflation target around to whatever is convenient for the moment. So I think it needs to maintain that 2% target. The question is, when will they achieve that 2% target? So I think they're a bit optimistic in thinking that they're going to achieve that very soon. I think it's going to be a while. I think inflation will start coming down. Some of the energy prices and some of the food prices have come down a bit in the US. And so I think the headline numbers will be a little bit lower. But I think even by the end of the year, when Jay Powell says interest rates will probably be around 3.5%, inflation is probably still going to be more than that. And they're probably going to need to push interest rates up a little bit further.
Yeah, so you're talking about negative real rates scenario, but when would, interest rates top out, would you say? At what point would you think that we're out of the danger zone? Because we're talking about now the Federal Reserve wanting to take a hardcore proactive approach as opposed to being reactionary to inflation at this stage.
Exactly, because obviously they were behind the curve, and they've admitted that they were too slow to pick up on inflation being an ongoing force rather than just something being transitory. They're trying to make up for that. That's why they're moving expeditiously. And so my hunch is that, we don't know, because there can be so many shocks that come in from Mr. Putin, from other geopolitical risks that are out there in the world. But assuming no major additional shocks than the ones that we've seen and anticipated, then probably the Fed will be able to peak in somewhere between upper 3s or 4% or so sometime by the middle of next year, and then start coming down. But I don't think they're going to start coming down until much, much later. Markets are assuming they're going to start turning down by the middle of next year. I think that's, it could either be optimistic or pessimistic. The reason that they think that the Fed may start to move down is because they're so pessimistic about the markets, and or it could be that they're very optimistic that inflation is coming down. I think the markets are pessimistic that in the sense that they think growth is going to slow significantly, and that's going to lead the Fed to move rates down.
Do you think there's a recession coming? Are you expecting a recession? Do you think that's a probability?
It's certainly there's a heightened risk of that. Of course, the Fed is trying to say we'll just have slow growth rather than consistent negative growth. Is that possible? Yes. Is it likely? Not so much, because I think there are going to be continuing shocks outside of the Fed's control that are not going to be positive for the economy.
Randall, Kroszner, thank you, sir. Really good to see you. Much appreciated for your time. All right, so up next is